Thursday, November 5th, I'm in the office of Tom Connolly in his law office at the firm Connolly Obadji. And Connolly Obadji specializes in personal injury cases and...
That's right, Ish. We're basically we're doing personal injury litigation from the plaintiff side, representing individuals that are injured in accidents, and whether the individuals are drivers or passengers or pedestrians that are somehow hurt in motor vehicle accidents. We're representing those individuals in advancing claims for compensation.
Right. And the reason I'm here is because recently the Ontario government granted permission to Ontario auto insurance companies to raise their rates. And I've been talking to Tom Connolly about the process by which these rate increases are determined and by which the government looks at them. Can you please explain a little bit to me and to our readers how this works?
There's really nothing new in the system, Ish, in terms of how these rates actually get analyzed. There's law passed that puts this obligation on the Financial Services Commission of Ontario, where insurers have to apply to increase rates. And there's a formula that is used by the Financial Services Commission to analyze the rates, determine whether they're reasonable and necessary. And these formulas have certain benchmarks in them in terms of analyzing these applications. And apparently what's happened in the last 12 months or so, there's been requests for higher premium increases from a number of companies, and these have been approved. The unfortunate thing is that the reasons for the approvals and the information that's going into determining whether they're reasonable and necessary has been kept secret from the public.
And that secrecy is an ongoing part of the process, isn't it?
Yes, it is. It's nothing new. I mean, this secrecy process has been going on probably since insurance premiums got fully regulated, which takes us back into the early 1990s. And what has happened is the whole process of understanding why these rates are being changed and the basis upon which they're being changed has been kept secret on the basis that to release the information to the public would have somehow affect the competitive position of individual insurance companies, that they're producing information that will affect their ability to market their product in the marketplace, and therefore only the individuals internal to FSCO have the information. The public simply gets information to the extent that the premiums are going up a specific percent.
Now, I understand it's a kind of a blunt tool by which they determine the levels of profitability that the insurance companies expect or are entitled to expect.
Well, we're advised, I think this is somewhat public knowledge, that the Financial Services Commission uses a 12% return on equity net of tax as a benchmark, allowing insurers to recoup that amount as a profit margin in determining the setting of premiums. But I say that without having complete access to what they're doing on a day-to-day basis, because what they're doing and how they're doing it and what the other benchmarks that they may be using to determine the reasonable calculation of premiums is all kept secret, and we can't access that.
12% strikes me as being fairly generous to begin with, and I guess there's concerns that 12% after taxes could conceal any number of expenses that we have no idea about, right?
Yeah, I mean, it's given where we are with the state of the economy in the last year, 12% return is pretty generous, I think, in any field. The problem of giving you an informed answer to the question is that though individuals have sought this information from the Financial Services Commission, it has not been forthcoming. And although there's been statements made by Premier McGuinty and by the Commissioner, the Freedom of Information Commissioner, that should be transparency and openness in relation to this kind of information, it doesn't happen, in fact.
So we don't know really from these figures about executive compensation or investment decisions or other kinds of losses the companies might be incurring?
No, we don't. I mean, there are a whole series of companies in Ontario writing automobile insurance, and some of them are better managed than others. And whether people are being rewarded or penalized for mismanagement or proper management, again, remains a secret.
When the announcement was made of the rate increase being approved, in the news stories that I saw and heard, there was mention made of increasing costs of medical assessment for accident victims, of the costs of physiotherapy. Do those strike you as being likely and credible reasons for rate increases in the double digits?
Well, it strikes me that there probably is these assessment costs being incurred on a large scale, and part of it's built into the system where individual adjusters don't make decisions with respect to approving benefits or disapproving or denying benefits on their own. They're forced into a system of getting outside opinion, so that as opposed to simply approving a particular medical rehab expense, they will seek their own expert, pay fees for that assessment as to whether in fact, and get an opinion whether in fact it's reasonable and necessary, and then based on that opinion we'll either approve or deny it. So it's often in these situations that we see that more money has actually been spent on assessments by the insurance company than actually goes to the victim. So that these costs, no doubt, are there to a large extent, but they're being used as a tool, basically, to deny benefits.